Hello traders. So let's take a look at price action on gold uh, throughout January 2026. Today is the 21st of January, so it's technically the third trading week. And based on what we can see on the charts, I think I mapped out this strong demand zone as far back as December 16th, but the market didn't mitigate this zone or tap into this zone up until the 31st of December, which I already stopped trading. I stopped trading second week of December 2025, right? So now, if you're familiar with chart patterns, for those that understand baby pips and all of those things, you notice that this is an inverse head and shoulder pattern. This is head, this is a left shoulder, and this is a right shoulder, right? Now, inverse head and shoulder pattern and the normal head and shoulder pattern, they signify a trend reversal pattern. It's trying to tell you that the market is trying to shift either from sells to buy or buy to sell, right? And in this case, the market is shifting from bearish to bullish. Now, another significant thing you need to note is this trend line, which I labeled here. Now, understanding trend line alone is going to make you a lot of money. Trend line is very, very powerful. As simple, as basic as it is very, very powerful, right? So now, after the break of this trend line, that means I should be looking for buy opportunities, right? So if I go to a much lower time frame, I would be able to see that there is another demand zone here that the market actually tapped into to give you a quick 1 to 4 if you are entering this trade. So let me go to like a 30 minutes time frame to make things clear for you guys. So this is a 30-minute time frame, and just on the right shoulder of the inverse head and shoulder pattern, you can see we have a sweep, we have a strong and a valid demand zone, right? And the market tapped right into this zone to give you a straight buy trade, right? This is 400%. All right, so depending on your risk appetite, I usually use a risk to reward of 1 to 3, 1 to 4. So each of my trades are usually between 300% or 400%, right? So now let's go back to the 1 hour time frame to continue with the analysis and the price action of gold. Now, the break of trend line has given us the first trade, right? The first trade idea, which is trading from this strong demand zone for a buy, because it's important for us to understand directional analysis, your directional bias. You need to know where the market is moving to so you can start taking trades in that direction. So now that we already understand that the market is or has already printed an inverse head and shoulder pattern, there's no reason for me to be looking for sales for the long term, right? So now the rule for inverse head and shoulder pattern or head and shoulder pattern states that whenever you break the neckline, this is the neckline, this is the neck, this is the head, the left shoulder, and the right shoulder. Whenever you break this neckline, right, once the market retests, you can continue to take the trade either to the upside or the downside. Now, and how do you also estimate your move? A lot of people don't know this. How you estimate your move in this kind of pattern is you take your line from the head up to the neckline. This is how to estimate your move and the number of pips, right? Then you drag it up, because the rule states that once we break the neckline, the market is going to print at least the distance between the neckline and the head. So if I'm taking the trade from here, I'm expecting the market, you know, to get up to this level. Can you see how we are using technicals to be able to understand our target? So your TP target or your SL target or your ultimate profit target is not just about, guesswork. So if I take my trade from this particular retest, because the market has retested this neckline, I can be looking to take profit somewhere around this region. And this is about, 635, about 600% return on investment on your trade. But don't forget, I told you guys, I usually take between 1 to 3 and 1 to 4. Whatever happens in the markets, I leave the rest, right? Because my mission is not to take everything. I'm just gonna take what I'm satisfied with and I'll move out, right? So let's look at the other price action. Market also give us two valid zones here. This is a valid buy zone, right? And this is another valid buy zone. Now, this is where the dilemma is. I used to tell my students, whenever you have two solid zones, let me just name it 1 and 2 in this case. What's wrong with okay, let me just name it 1. Sorry, let's name this 1 and let's name this 2. 2. Now, in this case, you have this strong buy zone, which is 1, and another strong demand zone, which is 2. Now, the best thing for you to do in this kind of scenario is always go for the extreme, right? So if you have a buy zone below your buy zone of interest, your POI, always look out for, or always give preference to the demand zone or supply zone at the extreme. And that was what happened there. Even though the market started into this zone, printed about 278%. And at the end of the day, market came all the way back. So I actually broke even here. I was in a profit of 200 and something percent because I usually hold out to 1 to 3 or 1 to 4. So market broke even here. That means I moved my stop loss to the entry point. So I made $0 on this trade, right? Then I took this trade because I knew once the market is not respecting this zone, the market will definitely come to the extreme and will take the trade all the way from there. And that was what happened. Market broke this zone, came all the way to the extreme, and printed about 1 to 4. I'm out of the market, even though I missed majority of the move, but I'm more than satisfied. Imagine holding my trade from this zone up until the current level of gold. Let's see. Yeah, up until the current level of gold, this should be about 1 to 25 R or something. Yeah, this is about 1 to 19. Yeah, this is about 1 to 19 or 1 to 15 R. But that's not the way I trade, right? In trading, you need to take the profit that is available. You need to be very, very disciplined because you don't get to see all these kind of trades every day. You don't get to enter trades and you're saying 1 to 10, 1 to 15, 1 to all of those things. So that should not be your focus, right? So going forward, what I'm looking forward for gold, even though gold has not presented any tradable opportunities for me in the past 2 trading weeks, right? But I'm expecting gold to rally up, then consolidate, push back, then give us a proper buy or sell entry, right? So I'm going to keep us posted in the chat or through my page if we get any opportunities on gold. But for now, there's nothing on gold. So I'm going to be doing another analysis on a separate pair. You guys can choose either Euro USD or GBP USD. All right. Thank you, guys.